This one rule has helped me stay green 60% of my trading days. In this video, I'm going to tell you guys what that rule is and show you how it played out in the live markets today. So looking at my TradeZella, we can see I had two trades, one winner, one loser, and I was down almost 500 bucks, and now I'm ending the day plus 200. And here's my TradeZella. I have an average daily win rate of 60% and a profit factor of 1.45. So looking at the trades today, I was trading ES, the S&P markets futures contract, and just to give a little bit of context, we had a nice rise in the overnight session and then a small little pullback at market open. So what I first want to say is the rule is two tries, same direction, same asset. If you get stopped out in the first one and your bias is still correct, give it another swing. You know, if your long didn't work out, that doesn't mean you have to go short. It just means maybe the market wasn't ready for that yet. So, diving into my trades, I always start by identifying what price pays. My best trades come about an hour and a half after the open, so that gives me time to know what price levels are working, what VWAPs are paying. So we can see the first long was a break of the New York VWAP. The stop would be at opening range low, and the take profit would be at opening range high. That paid. So now in my head, I'm saying the 70s, they're going to pay today. The next trade we have is opening range high. Opening range high, breaking out to initial balance high, that paid today. So I've got two price levels in mind, the 70s and the 80s. You'd be working the 80s to the 90s, and you'd work the 70s to the 80s. So we break the initial balance high, which I know, especially on Mondays, in the last 6 months, we only break one side of the initial balance 92% of the time. So that means I am trading with a 92% edge on my longs. So what do? I get in at opening range high. We hold the New York VWAP, we bounce, I get in. That's my entry signal. I'm playing the same price level. Now, so we can see this trade didn't work. My stop was just a little bit too tight. It was just right there. So I get stopped out. Now I'm down, 500 bucks. What do? I look for the next price that pays, and I keep holding that bias. Just because it goes back into the range, it looks like it's selling off a little bit. That doesn't mean I'm going to go short. So what paid? Previous day VWAP has paid, as well as the mid 70s. So now previous day VWAP and the mid 70s again. Now this is my opportunity. Now I also have the stop under the initial balance low. So that means I'm still trading with this 92% edge. And then it was just a clean winner. I barely set, I didn't even sit in drawdown, and it just went straight to my take profit. Now, it's just so important that you give yourself two tries on the same idea, because there are plenty of people that I'm sure took this long and then maybe wanted to flip short and then ended up taking two losses. If you have confidence in your bias on the day, where especially if we're trading the US markets, your bias should almost always be long, because when you look at the contract, we're just moving up. It's just a long bias system. So if you want results like this, I highly recommend you implement this strategy. Give it a week, give it 2 weeks, see how you feel. Because even if your first trade is a loser, your second trade is just going to make that back up, especially if you have a good entry. So let me know if you guys like this tip. Comment down below.